Imagine a world where your hard-earned money, instead of slowly eroding due to inflation, actually grew at a rate that made a real difference. For too long, traditional banks have offered paltry interest rates, often hovering near 0% APY, effectively diminishing your purchasing power over time. It's a system where banks profit immensely from your deposits, while you, the depositor, are left with crumbs. Think about it. Banks take your money, lend it out at significantly higher rates, and pocket the difference. Meanwhile, inflation, a constant and insidious force, chips away at the value of your savings. If inflation is at 3% and your bank offers 0.01% APY, you're not just treading water, you're actively sinking. This isn't a fair exchange. It's a financial imbalance that disproportionately benefits the institutions. But what if we flipped the script? What if the power dynamic shifted, and banks were forced to compete for your money? The solution is simple yet profound. A minimum interest rate of no less than 4% APY on all standard savings accounts. Why 4%? It's a realistic yet impactful figure. It's a rate that acknowledges the current economic climate, where inflation is often a significant concern. It's a rate that provides a tangible return for depositors, allowing their money to truly work for them. A 4% APY would mean, 1, real growth. Your savings would no longer be stagnant. They would grow at a rate that outpaces or at least significantly mitigates the effects of inflation. 2, increased purchasing power. Over time, you'd find your money retaining or even increasing its purchasing power, giving you more financial freedom and security. And 3, fairer share of profits. Banks, while still profitable, would be sharing a more equitable portion of their earnings with the very people who provide them with their capital. Some might argue that this would be too burdensome for banks, but consider the vast sums of money they hold and the immense profits they generate. This isn't about bankrupting financial institutions. It's about rebalancing the scales and recognizing the true value of your deposits. Your money isn't just a number in their ledger. It's the lifeblood of their operations. In a competitive market, businesses must offer value to attract customers. Why should banks be any different? If they want access to your money, they need to make it worth your while. They need to compete not just with each other, but for your financial well-being. Imagine the impact on individual savings, on consumer confidence, and on the broader economy. People would be more inclined to save, knowing their efforts would be genuinely rewarded. This isn't just a plea for higher interest rates. It's a demand for a fundamental shift in how banks value their customers. It's time we stopped accepting the status quo. It's time we demanded that if banks want to compete with our money, they must compete for our money. And a minimum of 4% APY is where that competition truly begins. What do you think? Is it time for banks to offer a fairer return on your savings?